All right, let's get right into it. The global economy just got a piece of news that honestly almost nobody saw coming, and it's sending these huge ripples from Wall Street all the way to central banks across the world. So in this explainer, we're going to break down exactly what happened, why it's such a big deal, and what the markets are bracing for next.
You know, it all boils down to this one little number, 2.7%. Now, just looking at it, it might not seem like much, right? But believe me, this single figure represents a massive shift in the whole economic story we've been following. Any guesses what it is?
Well, there you have it. That 2.7% was the actual headline inflation in the US. And what's really crucial here is that gap you see. All the experts, all the economists, they were betting on 3.1%. Getting a number that much lower, that's not just a small miss, it's a huge signal that the fever of high prices might finally be breaking, and way faster than anyone thought possible.
So, this brings us to our first big topic. After months and months of anxiety, it really looks like inflation in the US has finally blinked. Let's dig into why this one single data point sent such a massive wave of optimism rippling through the markets.
And to really put this into perspective, we're not just talking about a good number for 1 month. This 2.7% reading is the lowest we have seen since way back in early 2021. I mean, that is a huge milestone in this long fight against rising prices.
So what does this actually mean for the economy? Well, this quote from our source material just sums it up perfectly. It's like the economy has found that Goldilocks sweet spot. It's not running so hot that inflation spirals out of control, but it's not so cold that we're worried about a recession. It's just right.
And the Goldilocks story gets even better, because here's the thing that economists dream of. You want to cool down inflation without freezing the job market. And it looks like that's exactly what's happening. Jobless claims actually went down, which is a sign of incredible strength. So we're seeing inflation cool off without breaking the labor market. That is the absolute best-case scenario.
Okay, so let's move to our next section and see how this all connects. With the US getting such good news, how are the other central banks around the world reacting? Well, it's a bit of a mixed bag, and it's revealing a real split in global strategy. And this slide just illustrates that split perfectly. On one side, you've got the European Central Bank hitting the pause button, just holding their rates steady. But then on the other side, the Bank of England just made a move in the total opposite direction. They actually cut their rates. Two major economies, two very different playbooks. Now, the ECB used this specific phrase, an extended pause. What on earth does that actually mean? Well, for the markets, it's basically code. It's the central bank's way of saying, hey, everybody relax. We're holding steady for a while. Don't expect any sudden moves or fireworks from us.
But what about that cut from the Bank of England? This quote gives us the really critical context. They made it crystal clear this was a reluctant, cautious cut. This wasn't the first of many to come. It was a specific reaction to some growing worries they have about their own economic growth.
And when you look inside the decision-making process, you can see just how cautious it was. I mean, the vote was razor thin, 5-4. The governor himself had to cast the deciding vote. They do think inflation will eventually get back to where it should be, but that immediate fear of a slowing economy is what tipped the scales.
Now, economic data like this doesn't just stay in the financial world for long. It jumps straight into the political arena. So let's shift our focus back to the US and see how this whole conversation around prices is now being framed.
In a recent speech, President Trump started to pivot his message. And as you can see from this quote, the new focus is all about affordability. And it's framed in a way that connects with people's everyday lives. It's a strategy to talk less about abstract economic theory and a lot more about, well, the price of a gallon of milk.
So, the message is pretty clear. Making things cheaper is now a top political priority heading into 2026. And why this matters is that you can bet the markets will be watching very closely to see if this talk actually turns into real policies that could affect everything from trade to taxes.
Okay, now let's zoom in on a major emerging market and see how it's handling all these global signals. Over in India, the mood is definitely one of caution, and different parts of its market are telling very different stories right now.
You can see that cautious mood really clearly in the stock market. Equities were down for the 4th day in a row. Now, a few big IT stocks did help stop a major slide, but the vast majority of sectors were down. It's what traders call a risk-off environment. Basically, investors are playing defense.
The Indian currency, the rupee, also felt some of that pressure, weakening a little bit against the dollar. And this happened even though their central bank stepped in to try and support it, which just goes to show you how strong the dollar's influence is right now.
But it's not all doom and gloom. Here is a fantastic example of a central bank taking decisive action. India's central bank, the RBI, injected a massive $16 billion into the system. And the result? It totally calmed down the bond market and brought yields down. A very, very effective move.
So, with all of this happening, where do we possibly go from here? Well, that brings us to our final section, the absolute flood of crucial economic data that is about to be released. And this is what will set the tone for the days and weeks ahead.
First up on our watch list is Japan. As you can see, their inflation is holding steady at 3%. Now, for a country that has literally battled deflation for decades, this is huge. It makes a long-awaited rate hike from the Bank of Japan, which has been a major outlier, seem almost certain.
And here is the main event calendar for the week. It is absolutely packed with data that could move markets. We've got that rate decision in Japan, we have policy meeting minutes coming out of India, and then the big one in the US, the PCE price index. That's the inflation number the Federal Reserve watches most closely because it tracks what people are actually spending their money on. All eyes are going to be on that one.
So what's the big takeaway for traders trying to navigate all this? Well, for the US dollar index, or DXY, which just measures the dollar's strength against other big currencies, the strategy right now seems to be sell on the rise. This suggests that even if the dollar gets stronger in the short term, the bigger trend is expected to be a weakening dollar.
And that's where we'll end. US inflation is cooling down. The world's central banks are divided, and politicians are suddenly very interested in your grocery bill, all while a wave of new data is about to hit. The global economy is truly at a crossroads. So the big question is, which one of these reports will be the one that dictates the next move? Which one will ultimately impact your mortgage, your car loan, and your savings? That's what we'll all be watching.